Now, many of us are familiar with accounting costs. In economics, so we look at costs a little different. So the question then becomes, what's the difference between economic costs and accounting costs? Well, the difference has to do with opportunity cost. Now, when we look at accounting costs, these include things like rent, capital costs, labor costs, all those things that we end up having to pay for when we're running a business. Now, economic costs differs in that the economic costs, it includes all those things. So economic costs equals the accounting costs, so the rent and the labor and material supplies and all that sort of thing, plus the opportunity cost of using our resources in another manner to earn income. So to help with this distinction, we can think of costs in terms of explicit and implicit. So implicit costs are the things that we pay dollars out for. So these are your rent, your supplies, so all those things that we typically associate with accounting costs. So explicit costs are our opportunity costs. So we actually don't pay dollars and cents out for these. So we can summarize by saying that our economic costs are equal to our implicit costs, which is our accounting types of cost, and our explicit costs, which are opportunity costs. Now, if we look at accounting profit, it is calculated by taking total revenue and subtracting explicit costs. Now let's look at economic profit. It is equal to total revenue minus explicit costs plus implicit costs. So in other words, economic profit is much smaller than accounting profit. So let's go through an example showing accounting profit versus economic profit. So suppose you're going to start a t-shirt company. You do some research and you find out that your total revenue that you believe you can get is $5,000 per month. So the blue box represents your total revenue. Now, to calculate your accounting profit, you're going to want to subtract from total revenue, which is the blue box, your explicit costs. Now, let's assume that your explicit costs, so these are things, rent for your actual location, rent for your equipment, labor costs, the raw materials costs, this ends up being $3,000 per month, which tells us that our accounting profit is $2,000 per month. Now let's see how this would differ from economic profit. So economic profit, you're going to start with your total revenue, so the big blue box representing all the total revenue. We're still going to have those same explicit costs. Only now we're going to have to take away our implicit costs. So suppose that in order for you to start the t-shirt company, you need to give up your part-time job, which pays you $1,000 a month. So what this leaves you left with is your economic profit of only $1,000, which you can see is much smaller than the accounting profit.